Good morning, everybody. Thank you guys for joining. I'm Nimish Shukla. I am the co-founder and COO at Liferaft, and I'll be leading our webinar today. We're incredibly excited. This is going to be the first of a series of webinars that we'll be hosting in 2024, really focused around the HRA and ICHRA, but focused on, I think, those topics where we can help drive some insight into what's been happening at a market level. What have we learned as an HRA provider, um, as we've talked to brokers and distribution partners and clients as well. Today's focus, though, is really going to be on 2023. If you haven't seen it yet, we published a white paper just a couple of weeks ago on HRA trends and insights from all of the learnings and interactions and clients that we worked with in 2023. So today is really meant to be a review of that white paper and to talk a little bit about what we've seen in the market, what we've learned, and really where we think the market is headed. For those of you that may not be familiar with Liferaft, I'll start with a quick overview of the company and myself, and then we'll go ahead and jump in and get started with the webinar. So, as I mentioned, I am Nimish. I'm one of the co-founders and COO at Liferaft, and we are a full-service HRA platform. So, when we say full service, what do we mean? We mean everything from plan design and creation through documentation, the paperwork, to actual account administration and money movement. For those of you that are familiar and have been in the ICHRA market and maybe worked a few cases, there are a lot of components there, but our platform is really meant to be that technology that you as a distribution partner can utilize when thinking or working with a client to implement an ICHRA. So our platform is really meant to be incredibly flexible. We can support all HRA account types, but also give you the tools that you need to either gain new business when you're talking to prospects where an HRA might be the right fit, or to work with existing clients that you have where maybe group health insurance is no longer the right solution for them. I'm Nimish. Again, my background, I've been in the insurance business since about 2015, started as an agent myself, as a co-founder at Blueprint Income. We were the first direct-to-consumer platform for annuities. So really built my initial years in the insurance industry, growing our sales and distribution of Blueprint Income, working with clients, selling products. Long story short, we built that business, got to about $500 million in premium volume before it was acquired by MassMutual, the insurance company. I left MassMutual after the acquisition, and Ian, who is our CEO, and I started Liferaft really with the idea of making benefits easier for both brokers and distribution partners, but also for companies. So we have a full service kind of HRA platform. As a part of the work that we do, we interact with thousands of brokers, PEOs, other distribution partners that are thinking about the HRAs or are actively enrolling clients into HRAs, whether that's a group HRA or integrated, whether that's an ICHRA, QSERA. And so a lot of what we're going to talk about today is gleaned directly from our insights and conversations with our distribution partners, but also their end clients, the actual employers. So let's go ahead and jump in here and talk about our 2023 year-end report. So let's talk a little bit at a high level. What do we see in 2023? I think if you talk to folks that are involved in the market, the real takeaway from 2023 is that the HRA market is starting really to gain steam. Obviously, these accounts have been around for a couple of years now, but I think 2023 is when we really started to see both employers becoming a little more familiar with the idea, especially around the ICHRA, but also specialty HRAs. But also, we're starting to see distribution partners more interested and familiar with the HRA setup. However, I think what we have learned from 2023 is that although progress has been made, there is still a lot of work to be done, whether it's with HRA administrators like ourselves, whether it's the employer understanding of the accounts or for us as distribution partners, those benefit brokers or the PEOs out there, I think there is still a substantial education gap in terms of understanding when and where the HRAs actually make sense. So, 2023, I think if you look at this at an industry level, there were a lot of questions folks were having around, is this the year the HRA is going to be big? I think what everybody has seen is that there is still a lot of work left to be done for the HRA to become a real viable, particularly on the health side, a real viable alternative to group health insurance. So we'll dive into the details a little bit here. But if we continue to see some of the macro trends in the group health insurance industry continue, I think 2024 could end up being a very interesting and big year for HRAs writ large, but also specifically the ICHRA as group employers look for more sustainable alternatives to the solutions that they have in place today. Great. So as I mentioned, right, when you look at the data specifically, and we've seen this play out at Liferaft as well, but I think you're seeing this industry wide, the HRA really is gaining popularity. And I think early on, the experts in the space were really thinking that the HRA was going to be a better fit for those small groups, particularly those that didn't necessarily need to be ACA compliant. And I think we've seen that to be true. The QSERA has been an incredibly, I think, attractive option for those companies that are well under 50, maybe have never offered benefits before. But also, we're actually seeing larger employers, particularly those ALEs, increase their adoption of the ICHRA. So if you look at each of these stats, the adoption at the employer level is continuing to trend upwards. I think the real question that we have to ask ourselves is, if those numbers continue to trend upwards and we're seeing increased cost pressure in the group space, then how are distribution partners and benefit brokers and PEOs, those that are really assisting employers with making that key decision on benefits, how are they going to best be suited to help deliver value as employers are more interested in the HRA, right? So not just small companies, but also larger companies now are really starting to take the ICHRA more seriously. If you look at that stat on the right hand, 144% growth. That is a pretty significant trend in terms of increases. There's a lot happening, I think, in the structure of group health insurance that's driving that. But I think if you had talked to people 2 years ago, everybody would have said HRA is interesting. It's going to work in the small space, particularly under 50, but it's going to have a hard time breaking into those larger groups. I think what the data is telling us and the adoption is telling us is that the ICHRA specifically is starting to move up market. And that has some really, I think, interesting implications for how benefit brokers and PEOs, those real advisors on health insurance, start to understand and apply these sorts of accounts for their groups. Although the growth has really been, I think, pretty impressive year over year, I think there has been a lot of feedback and data that employers have both shared with us, have shared with our partners, that are some of the concerns when they're thinking about transitioning to the ICHRA, right? And I can boil down, there's a long list here, but if you really want to think about it, it boils down, I think, to really three key areas, right? Number one is change management. Anytime you are implementing a new solution with an employer, whether that's a new carrier, even if you're staying fully insured, or if you're really making a switch from group health insurance to the ICHRA, change management becomes a very big concern for employers. There is, I think, the process of implementing the ICHRA, which is different today than group health insurance, right? But there's also then the interaction of the employer and the employee. Employers, I think, feel a need and a desire to very clearly communicate both what the employees can expect, but also help them understand the process of securing health insurance. Now, that change management, I think, can really become a big concern for employers. What we have found is even when there is significant cost savings to be had at the employer level by switching to an ICHRA, oftentimes the change management component can be a really big hurdle to having that group transition over into utilizing an ICHRA. So one big category here is change management, right? We've seen this. Number two here, too much effort to switch. That's really what it boils down to. Number three, overwhelmed with the paperwork. All of those things are really ones that become significant challenges to employers. The second big, I think, area and challenge has been health insurance enrollment. So this has been, I think, an issue across the value chain. And when I say value chain, really what I'm thinking of is, the process of implementing insurance at a group level really involves kind of three key stakeholder groups. The first being the broker, the benefit consultant, or the PEO. The second is that employer and the HR admin. And the third are the employees. Health insurance enrollment is a significant cause of concern and friction for all three of those stakeholders. What we found is in the group space, for our partners that are doing primarily group health insurance today, they either don't necessarily want to do health insurance enrollments or don't have people on their team or the capacity to handle those. Employers are always concerned about the quality and the process the quality of the plans, but also the process employees are going to have to go through to select and find and enroll in health insurance. And the third are those employees. I think employees oftentimes can feel concerned or overwhelmed. And so that really becomes another key, I think, hurdle to seeing more widespread adoption of the HRA. And I think that the third, and we'll talk more about this a little bit later, shows up in platforms with more products, right? Number 9 or 8, payroll integrations, or number 7, claims and insurance payment automation. Really what that means is I think the tooling within the HRA ecosystem and the ICHRA ecosystem has not gotten us to a place where people are focused on the value it can drive, but really focused on, change management, but also, is the process of implementing the HRA easy enough? So those, I think, despite the growth, I think there are some serious concerns out there across the board, particularly at the employer level, that we think is hampering broader adoption of the HRA. And I should mention for those folks that maybe joined a little bit later, if at any point there's a question that comes up, please feel free to utilize the Q&A. And I will make sure that I save some time at the end, but also as we're going through the slides, if there's a relevant question to a slide, happy to pause and answer them then. Great. So again, I think, I just talked about this, right? We have the long list. But I think there's one other point here that I want to mention, which is there is I think from a partner perspective, one of the most frequent questions that I get when we're talking about HRAs or we're talking about ICHRA specifically is, how do I know if the ICHRA is going to be a good fit for this client in this state? And I think the reality is that the ICHRA today is not always going to be a good fit in all 50 states. And really, there's two things to keep in mind when evaluating and thinking about ICHRA adoption on a state-by-state basis. I think the first is, obviously the cost of individual health insurance plans, right? One of the key, I think, again, going back to the last slide, one of the key drivers of employers being interested in the accounts is that it can save employers a lot of money because individual plans are cheaper in many states when compared to group health insurance. The second key piece of that, though, is not just price. It is what I call marketplace depth. So on a state-by-state basis, what is the quality of the plans that are available in the marketplace? What carriers are available in that marketplace? I think the the decision that an employer has to make is both price driven, but also employee satisfaction driven. And if you're in a state where the depth of that individual market and the quality of the plans that are available isn't close to on par with what you're offering today, most groups are going to end up staying with their group health insurance because employees need access to certain doctors or have a network preference. And so that, as we think about moving into 2024, really becomes, I think, a key point of friction that I think HRA providers need to keep in mind, but also as distribution partners are talking more about HRAs and ICHRAs, that is something that needs to really be kept top of mind as we're looking at more companies adopting the HRA. Now, let's talk specifically, right, about what have we seen? That was the employer side. What have we seen on the distribution partner side? Now, for us as a company, a majority of the distribution partners we work with are benefit brokers, right? Folks that have been traditionally in the group space, but are seeing more activity with the HRA and the ICHRA, but also PEOs to some extent. So, what are kind of some of the key takeaways that we've seen? I think the first is, with the increased cost pressure that group health insurance rates are seeing, that generates increased pressure on distribution partners, right? I think many of us have had clients over the last couple of years who have come to us and said, why do we just get hit with a 25%, a 30% renewal increase? And that can be really, really challenging for companies. If you really think about it, what group health insurance is doing is essentially creating additional P&L stress for companies over time, particularly those that may be high utilizers, right? Or may have one or two high utilizers where that renewal is coming in and it continues to increase. At some point, for employers of certain sizes, that can become unsustainable. And the ICHRA becomes a replacement option primarily due to the fact that there is that increased cost pressure. I think if we see that again in 2024, in all likelihood, there are going to be more groups that are looking to transition from group health insurance into an alternative. Now, when working with clients, I think the ICHRA's flexibility can really become, I think, your the key to addressing challenges that your groups have, particularly those where group health insurance may no longer be the right fit, right? The ICHRA actually gives sufficient amount of flexibility to both cover premiums, right, and enable the health insurance purchasing experience. But actually, what we've seen over the last year, particularly with those groups that we worked on with group brokers and PEOs, is that the ICHRA has started also to be used in more flexible ways, especially in those states where the marketplace depth and quality of plans may not be on par with what's available in the group space. So said differently, right? For those groups that may have higher tiers of coverage today, but the cost is becoming unsustainable in the group space, the ICHRA can be used to cover both health insurance premiums, but is also being used to help cover some out-of-pocket costs to make group health individual plans more on par with their existing solution. So they're both saving cost, but they're also then providing a similar level of coverage to their employees. So I think that, coupled with the ICHRA's flexibility around plan participation, there are no minimums. Workforces that are getting older, if you have groups that have very diverse employee bases, so full-time, part-time, hourly, salaried, the ICHRA gives us enough flexibility to really address, I think, the unique challenges that some of those groups face. And I think the third key takeaway that we've seen is that when we look at the HRA ecosystem and the HRA provider ecosystem, a majority of the platforms today, I think, have been built with the end consumer, so the employer, in mind. And that's important. But I think if the ICHRA is going to have broader adoption, but also if it stands a chance, right, it needs to be built and tailored towards, I think, our group brokers and our PEOs, where the ICHRA may not always be the right choice, but if you are going in and talking to either a prospect or an existing client, you want to be comfortable that the tools that are available to you and the platform that's available to you is one that's going to be straightforward and you're going to be comfortable utilizing in your process, but then also implementing with your clients at some point. From our experience and all of the conversations that we've had, there is a lot of work that needs to go into improving the broker experience in terms of interacting, presenting, and implementing HRAs writ large. Great. So let's talk a little bit about what we've seen on the account side, right? There are a lot of HRAs out there. Where have we actually seen some key trends with the accounts and the brokers that we've worked with? The first is when looking at those HRAs that are geared towards health insurance coverage, so ICHRA and QSERA particularly. What we've seen is a majority of the groups are actually strictly focusing on HRAs for health insurance premiums. So I've seen this really be the trend and the case in those 50 and over groups where they've really struggled potentially with participation for them to find an ACA compliant solution rather than loop in additional health expenses that can be covered through reimbursement. The companies are really focusing on, hey, let's use this as a vehicle to just look at reimbursing health insurance premiums, getting compliant, and making sure that those people that want health insurance coverage through us have access to it. I think we're also seeing that when we have companies that are on budget constraints, right? So this, I think, applies more broadly within the small group segment. But if you look at the distribution of our QSERAs, and this is data that we have in our system and we keep an eye on, QSERAs are also primarily being used for health insurance premiums only. Now that may switch. That may not be the case as we start to see broader adoption, particularly in the ICHRA, with those larger groups that are looking at replacing higher tiers of coverage that they have today. But for now, I think we're really seeing pretty plain, I think, straightforward utilization of the ICHRA and the QSERA plans. The last thing I want to mention on the ICHRA and the QSERA side, and then we'll talk about group and integrated HRAs a little bit, is employers, when thinking about how to structure these ICHRA and QSERA benefits, are in our system are actually utilizing monthly rollover. So essentially giving their employees a little bit more leeway in terms of ensuring that they're going to get reimbursed for any health insurance premiums. I think the reality is, as we move to a market that more closely resembles the group health insurance experience, rollovers are not going to be as common within the ICHRA and the QSERA space. But for today, with all of the clients that we've seen, monthly rollovers are actually a pretty common feature. I think 90 to 95% of the accounts that are on our platform are utilizing a monthly rollover structure, but are very limited in their application of the annual rollover functionality, which is available through those HRAs. So that's on the ICHRA and the QSERA side. I think one of the interesting trends that we've seen in 2023 is that integrated and group HRAs are certainly on the rise. We've had a lot more employers, group brokers, and PEOs thinking about and talking to us about utilizing a group or a specialty HRA. But it's really been driven by only those companies where there is a very acute need right now. So what I mean by that is groups where employees have been very vocal in their desire for fertility benefits, or groups that have previously had richer group health insurance benefits, have made a transition down in the quality of coverage, not through an HRA, but maybe gone from a gold to a silver or bronze equivalent plan in their group space, but are looking to utilize the HRA alongside to save cost, but also really to give employees a view of a feeling of there's better coverage behind that plan. We may have stepped you down on the major medical, but you don't have to be as concerned because look, there's a corridor strategy here. You meet the first 500 of your deductible, the company's going to cover the next $2,000, right? Instances like those, I think we've seen more of them. But the reality is that has really been a push from I would say company up rather than it has been broker distribution partner down in terms of employers starting to think about how to utilize accounts like that. Great. So I want to talk a little bit about, there's a big key piece here, which I've mentioned earlier, which is, um, uh, you know, with the individual coverage HRA, specifically in the ICHRA, right? A big key part that has introduced friction has been health insurance selection and enrollment. But also, I think there's a question on the quality of the plans, right? We talked about the depth of the individual market. One of the, I think, advantages of having a full service platform like ours is that we're getting data across both the HRA process, account structures, but we're also getting data on health enrollment trends and selection. And I think there are broad implications for our distribution partners, but there are also very, I think, clear clear learnings that I think carriers should be honing in on to really create better product offerings, right? So if we look at all of the individual health enrollments on our site, or all of the employees that have selected an individual plan to participate in the ICHRA and all of their plan details, really, I think there's three kind of key trends that we've seen. When you look at, and I'm going to bring a little bit of context behind this, I think if you look at most individual exchanges, when you look at the distribution of different metal tiers that are available in pretty much every state, you're going to see that the highest level of distribution in terms of plans available is going to be the silver tier. So you have your bronze, you have your expanded bronze, in some cases, silver, gold, and then in some states, you've got your platinum. It really, is, I think, in terms of which plans are available, a bell curve. What we've seen and have found with the plans that have been selected with people participating in ICHRAs is that it's actually more of a there's a heavy distribution with expanded bronze, and there's a heavy distribution with gold level plans. And really, I think what that tells you is what employees are doing is essentially selecting the best relative value based on the ICHRA budget that they are being afforded. Because I think one hypothesis, right, and thought that folks had would be if you're getting an ICHRA reimbursement, pretty much everybody's going to select a level of silver, right? It's right in the fairway. Plans are decent, out-of-pocket minimums and deductibles should be reasonable. Premiums are okay. But what we're seeing is for those clients that are budget constrained, more of their employees are actually going into the expanded bronze category because they're getting, maybe a slightly higher deductible and out-of-pocket max, but the premium is going to be lower than that silver tier. And for those clients, employers and employees, where they're getting a slightly higher reimbursement relative to the exchange pricing, most of those folks are actually moving out of the silver range into gold. We don't see a lot of platinum, although we do see some silver, but really there's a key distribution around those two. And so you're seeing more planes available in the silver category, but you're actually seeing people select from one of the two around it. And I think, again, the kind of key takeaway for us is as we look at if there's ICHRA adoption, broader spread ICHRA adoption for the carriers that play in the individual market, I think it becomes a really important learning that there may be real key product innovations that can occur around, outside of the silver category, where you might see some real adoption in terms of, I think, employees enrolling, but then also employee satisfaction based on what they're receiving. I think the other kind of key challenge that we've seen on the health plan enrollment side that's been a key, a point of friction at the employer level, but also at the employee level, have been employers concerned about out-of-pocket maximums. I think if you look at most group plans and you look at the individual market, those OP maxes are going to be higher in the individual market, and so that might just be another area for carriers to really keep an eye on if they're interested in broader ICHRA adoption. So, as we start to look at 2024, right, where are the potential kind of continued challenges for broader ICHRA adoption, and where are some of the opportunities? I think we've talked about this at length today, but really health insurance enrollment. I think you talk to any employer, employee, or broker or PEO that has looked at or used an ICHRA in the past, health insurance enrollment has been a challenge. Either it's been disjointed, or employees have been confused, or they've needed more support through that process. Although the flexibility for employees to purchase and select a plan that is a better fit for them is, I think, a key value driver of the ICHRA. One of the key challenges is really going to be around managing that experience. And if that process isn't improved, I think that is going to be a key hurdle to HRA adoption as we move into 2024. I think the second is, when I think about specialty HRAs, I think there can be real value driven with the specialty HRA, but those are incredibly, I think, complicated and complex accounts to both market to our clients, but also then find the right plan selection, or excuse me, plan design. And so I think, the reality is a lot of other platforms out there also don't necessarily have the structure to support those. And so, if we want to see, again, broader adoption of the HRA, or we think there's going to be broader adoption, one of, I think, the key challenges here is going to be, are HRA administrators thinking about specialty HRA application and process in terms of building the tools that they do? And I think the third is really what happens in the individual health market, right? I think for the last number of years, we've seen the individual market or the increases of the group rates have really outpaced the individual market. If that doesn't continue to happen, some of the benefit on the pricing that the ICHRA can drive, some of that may be reduced, which may have groups thinking twice about transitioning over to the HRA. So those are some of the challenges we kind of see as we head into 2024. But really, where are the areas of opportunity, and where do we think there are going to be some positive trends on ICHRA adoption as we look at 2024? I think the first is, a big one, which is that continued cost pressure. Last year, as we saw, I think two things. One, increased, we were seeing a lot of groups getting double-digit rate increases on their group policies, but also one key kind of change with Humana starting to exit the group health insurance business. We were starting to see more and more groups that were on Humana primarily because they struggled with participation, were making the transition and looking for an alternative because they had, they couldn't get a quote from another group carrier. I think if we see that continued cost pressure into 2024 and some of the trends on health insurance utilization continue, particularly as we moved out of COVID, I think you're going to see more and more groups thinking about the ICHRA, but also more and more distribution partners presenting the ICRA, but also utilizing it sheerly potentially from a defensive position. So, even if distribution partners aren't necessarily proactively pitching the ICRA, they're going to want to make sure they have an ICRA solution, because it's possible groups that are stuck in a bind and can't get group health insurance, or are looking for a more cost sustainable way to deliver health insurance, are going to be asking about the account types. So that's one big area of opportunity. I think the second one, and we've just started to see the beginning of this, is, are more states going to lean into incentivizing HRA utilization? So late last year, we saw Indiana um, essentially provide an employer level tax benefit for adoption of the HRAs. I think if we see more states start to utilize certain incentives, you're going to see more small businesses really take that transition more seriously, because then they're going to have an increased cost incentive to really be looking at utilizing the ICRA. So I think Indiana is going to be a really key state for everybody to watch this year. I think it's likely you see a lot more utilization in Indiana. I think if that happens and we see, pretty positive health insurance enrollment trends as a result coming out of it, it is very likely that you're going to have other states start to look at ways to incentivize the HRA. I think two other ones, right? I think number one, really customization of HRA solutions for cost control, right? And what we mean here is, yes, there is the ICRA and the QSERA, which we've seen, in 2023, health insurance premium coverage only. But I think that the key question here is going to be, are HRA administrators and platforms set up so that distribution partners can bring unique value driving solutions to the table when meeting with clients by utilizing an HRA? I think if we start to see, again, that cost pressure, and we see states incentivizing the HRA, there may be groups that actually have more bespoke and unique needs that are going to be coming to the table. And a plain Jane ICRA or QSERA isn't going to be the one that actually delivers the right set of benefit structure to the employer or to the employees. And so as platforms in the space can actually deliver more customizable solutions, I think there's going to potentially be broader adoption, and you're going to see that market expand as well, right? It's not just going to be the 50 and under groups that are looking at the ICRA, but you're going to start to see other larger groups, I think, really consider whether a transition makes sense. And I think, the fourth one and the big one is improvements to the tooling that is available for benefit brokers and PEOs. I think in order for the HRA to become a larger, become a viable alternative, but also become a larger part of the market share today, brokers and distribution partners and the folks that have relationships with groups that are really the ones that the employers are relying on, they need better tools. They need better tools to be able to talk about, to educate, to create plan designs, to show scenarios, to enroll, to administer, and to assist employers with that transition. I think if I think back to the beginning of our white paper and the presentation here, right? One of the key friction points and reasons employers don't feel comfortable moving forward with an HRA is because of change management. The brokers and the folks that have relationships with the employers play an incredibly important, and I would say the most important role in helping employers through that transition. However, today's tooling is not sufficient for brokers. So that's the end of the materials here. The last thing I want to say is, as Liferaft and our platform, our focus is really that last piece. I think, as the market here continues to mature, our business and the way that we have built and are continuing to build our platform is really to be that trusted partner and platform that distribution partners, the folks that are out there meeting with employers, have those relationships, can feel comfortable utilizing when both presenting HRAs, but also then implementing HRAs, right? Our goal is to provide an experience that our benefit broker partners, our PEO partners, our consultant partners, our CPA partners, all of them can take to a client and feel comfortable that the client is gonna be able to make that transition smoothly. They're gonna understand everything that's happening and really have the tools available to the broker, but also to the employer to be able to provide their employees a really first class, best in class experience when transitioning to an HRA. So with that, that's actually the end of the materials today. Again, as a reminder, if you haven't yet, on both the landing page where you registered for this webinar, but also through an email you should have gotten, our HRA, our 2023 HRA Trends and Insights white paper is live. I will mention we have another white paper coming towards the end of the month. The focus this month is actually going to be on health plan selection. So we talked a little bit about that today, but we're going to have a full white paper really diving into, for those people that participated in HRAs, really talk about some of the trends around health plan selection, where were the pain points, what plans were being selected, and some of the takeaways that we as folks that are distributing the HRA can really think about, whether you're a CPA, whether you're a benefit broker, whether you're in the PEO space. I think that one's going to be really interesting. And so keep an eye out for that one. But with that, thank you all so much for joining. I'm going to go ahead and stop the recording. But we'll stick around for any questions that folks have.